Uwe Jacobs from Property Friends. As I start and we'll do a bit of technology, as I call it, I'll introduce the panel. So tonight we had a bit of a change. Unfortunately, Paul Humphreys could not make it tonight due to the general requests for information and things like that he had to attend to his business. We will bring Paul back Wednesday next week. And before I talk too much, I'd like to introduce Mark O'Reilly from Australian Brokers Countrywide and Peter Griffin. Mark and Peter, can you please give yourselves, say, a 2-minute introduction? That gives me time to fiddle with the technology.
So I'm Mark O'Reilly. I'm a director at Brokers Countrywide, which is an insurance broking business. We've got offices in Melbourne and in Brisbane. I employ around 80 staff and a number of specialist divisions that do all sorts of different things because insurance comes in all shapes and sizes. So we're there to try and help people protect their life's work by giving them an insurance solution. My specialties after 30 years of being in the industry are primarily construction and property, and also get heavily involved in a lot of the technical claims side of the industry to try and help people go and argue and reword and redevelop points to try and get claims paid. So over to you, Peter.
Thanks, Mark. Thanks, Uwe. My name is Peter Griffin. I'm the principal of PMG Law. We're a law firm based in Brisbane. I'm a sole practitioner. Uwe and I have been working together for at least 15 years, might be more now, Uwe.
I'd say it goes close to 20.
Closer to 20. We do a number of things, one of which, of course, as you may have guessed from working with Uwe, is property. We do a lot of property work, but we also like to help people with their business and personal structures, so what we would call asset protection, protecting assets against litigation. So the second line of defence after insurance. And we also do a lot of estate planning, so we like to help people with their personal documents, wills, powers of attorney, advanced care or advanced health directives, depending on what state you're in. That is PMG Law.
Great, thanks guys. I guess I should do the same for the ones that don't know me. Uwe Jacobs, we run Property Friends, and Property Friends is a solution provider for people that aspire to financial independence, that want to have options in retirement, or want to leave a legacy. Now, couple of things up front. One, I can't get the technology going on Livebook on Facebook at the moment. That's interesting. Which just shows that there is a very heavy load on the internet. Two, the whole, I think it's fair to say, and over to you guys as well to chip in, the whole situation has caught most people, including most governments, by surprise. That's fair to say. Now, I'm not going to go political, but I have to say that I'm very impressed with how our government and both sides of the fence are reacting. And I can see leadership that I haven't seen before. So I find that very encouraging. From my point of view, Australia is about 3 weeks behind Europe, so there's lessons to be learned, and we can take advantage of those lessons, which is also why the Australian government has reacted fairly swiftly. Some say not fast enough, but fairly swiftly. So, yeah, all in all, there's two choices that we can take. We can either wallow in the mud, or we can look at the silver lining. I don't know about you, but Property Friends and my family, we ourselves, and I'm sure I can talk for the other two panel members, we choose to look at the silver lining. And there is silver lining. I can see plenty of it. I don't want to go too esoteric, but there is silver lining. So, yeah, on that note, we are continuing tonight with the briefing sessions that we started last Wednesday in the big panel of 6. You will be able to find all recordings on the Property Friends Facebook side. We generally try to live stream. When it works, it's brilliant. And tonight it doesn't want to work. It's okay. So that's why on the next day we put the recordings on Facebook and usually also on LinkedIn. I would like to thank specifically hang on, I'm just gonna take the video off. Thank you, Ruan. Yeah, and welcome to all the people that have registered and that are in this room. I am blown away by the response, and I think it's very encouraging. And it's also a reflection, what I was going to say, on the people that we're working with. They're called SAP, Strategic Alliance Partners, for a reason. And that reason is that every one of those people has got a tremendous amount of experience and has been working with or in conjunction with property for a long, long time. As you heard before, Peter Griffin and Property Friends, we've worked together 15 to 20 years. Mark, how long do we know each other?
About 12 years.
Yeah. Paul Ray, the accountant, Melissa Mann, Paul Humphreys, Catherine Isbrand, all people that we know very, very well. And this is the trick, in my view. As I said yesterday, it's hard to soar like an eagle when you're surrounded by turkeys. We make sure that we're surrounding ourselves with eagles because, quite frankly, our mission in life for you is to help you. Now, please understand that I didn't get anything out of these sessions, and please understand it was a hell of a lot of work. So tonight we're going to hear initially from Mark O'Reilly on the subject matter of insurance, and then if Peter wants to chip in anytime, that's fine. I will then do a summary of what we've been through, and I will provide what Ulla and I are doing ourselves. Again, the golden rules. I'm not suggesting anything that we're not doing ourselves. So I'll let you into the, or behind the veil of secrecy and behind the veil of what is going on. I will tell you exactly what we are doing and how we're doing it. All right, enough of an intro. Let's get this show started. Mark, over to you, please.
Thanks, Uwe. What I wanted to talk about was the generic world of go.
Can I just say one more thing? We welcome questions. In the chat window, you'll find, if you move your mouse to the bottom of the window, there is a chat window that you can open, and feel free to put questions in there. Last thing, if you go to the top of the screen, you can toggle between speaker's view and gallery view. Personally, I prefer gallery view, then you see everybody on the same screen. All right, apologies, Mark, please go.
Great. The questions are the easiest part with this. So if there are any questions, that's great because we can be a bit more precise in the advice. But because insurance comes in so many different makes and models, it's really difficult to give a generic element of advice because every sector of the industry is reacting differently. So it's very different to a hairdresser, to a local market stall operator, to a big corporate company. All the insurance covers end up being different with different responses. The generic element with insurance, though, is what we must have first and foremost is an occurrence. Something must happen for insurance to respond. And a normal example is a fire. A fire, the policy responds, your assets are protected, the insurance is there to provide you with a sum of money to put you back into the position you're in prior to the loss or the occurrence. In this circumstance, there is no occurrence because it's basically an economic shutdown. It's a business-related risk and it's a personal risk, but it's not necessarily an insurance-related risk. So the vast majority of Australians, it's the first time this type of event has happened where the insurance industry hasn't been able to respond. So The insurance industry as a sector has had massive fires to deal with over the summer. We've also had hailstorms in Canberra and in Melbourne and various other parts. And then earlier on, we had massive flooding. So the insurance industry as a sector was already stretched with massive amount of claims. And now we've got a whole new crisis of how the insurance sector is going to deal with that, and what levers can us as insurance brokers and insurance companies pull to try and help people when they need it most. So a lot of industries have shut down, and that's terrible, and a lot of people are out of work, and okay, that's equally terrible. The good and the bad to the insurance sector is we're already stretched to capacity, so everyone in the insurance sector has still got a lot of work. That's the good answer. The hard part is how do we cope with all of these different things? So an average call centre, and take IAG, which is NRMA and a few other brands, and CGU, they've elected to recruit 400 people just to try and help with the response of what is basically happening is everybody in distress needs to call someone and work out how they can get some help. So what type of conversations are those ones having is where I wanted to go to next. Some of the levers that a lot of people will naively pull is insurance is simply an expense, and I need to kill the expense, so I won't buy insurance. The challenge to that is insurance, whilst generally, depending on the style of business, might represent 1% of a cost to a business, it represents your whole life because it's there to protect you. So the first thing you've got to do is not cancel your insurance because it's a vital element. And if you own property, and property can be a landlord's property, it can be a commercial property, it can be all sorts of property, the risk of damage, and we get back to that occurrence circumstance we were talking about, the risk of damage is still there. It could happen tomorrow. And that's what you buy insurance for, is the uncertain element of what might happen tomorrow. So there's still going to be fires. The majority of fires are started from an electrical circuit. So there's still a lot of fires going to happen. There's still a lot of burglaries. There's still a lot of glass damage, etc. We can go on with how insurance would respond and deal with the ordinary everyday claims as an industry that we would normally deal with. So the first recommendation is don't cancel your insurance. It's the one thing that you need to have, and it's a must-have. It's not a questionable expense. You must have your insurance. So then you get down to some of the levers that you might be able to trigger. If that 1% of cost, if you can't pay it, what's the mechanisms around how you can defer it and change that? That's the biggest thing that people are looking at. So you can look to changing your excess and doing a couple of things with some limits and working out what you don't necessarily need right now, but you're really only playing at about 0.1% of the 1% of insurance costs. So you can start playing with levers and talking to people and working out what you can cut out and change and maximise. What's happened this week in the insurance sector is all of the big insurers have come out and made announcements of how they can try and help people, which is great as an industry. Ideally, it would have been better if every insurer got together through the Insurance Council of Australia and they all gave the same message at the same time. That didn't quite happen. You can never herd the sheep, so to speak. But the reality of it is the insurance sector is there to try and help people by way of deferring payments. As of 5 o'clock tonight, a lot of the main insurers being QBE, Suncorp, which is Vero, AAMI, GIO, IAG, Allianz, etc. They've all come out and made announcements that they're there to help people. The devil is always in the detail, and the simple statement that they've made still needs a lot of work. The challenge to that is it's quite easy for me to just say, well, you don't need to pay it for up to 6 months. What does up to mean? When are they going to ask you to pay it? At the end of 6 months, how can you pay it? Do you even have the money? So another mechanism that you can look at is try to not necessarily just kill all payments. Try to work on a deferred method where you're paying it off in instalments. If you're renewing your policy now, it's much better to just pay it off over monthly chunks or monthly instalment premiums. So it defers the payment, so to speak. It keeps the money in your pocket when you need it, but you don't have a big headache coming, because all that's happened for the insurance sector is, rather than getting free insurance, because things don't happen for free, a lot of these announcements that have come out, you might have seen them this week, is they're just agreeing to defer the payment. So the trick to that is, how long is it deferred to? Let's say it takes 1 month, 2 months, 3 months for the government to relax some of these current rules. that's when the insurers are going to say, right now you've got to pay for it. So if you haven't been trading, perhaps, or you've been on a reduced trading mechanism, as soon as they open up and as soon as the insurers call for the money, how are you going to find the money? So the first recommendation is try to look to an instalment process first. So don't cancel, go to an instalment process. Then the third lever, if you really need to, try to look at some of the limits and excesses so you can try to reduce some of those costs. So that's some of the mechanisms that you can look at with what's going on at the moment. But make sure you keep your insurance. That's the key message for that. So then what I wanted to talk about is some of the more cute covers of insurance, if you call it that. And cute's the wrong word, but everybody understands property insurance because you're insuring something physical. Everyone understands motor vehicle insurance because you're insuring something physical. In a liability insurance sense, you're insuring against someone suing you. So it's very difficult to try and cancel or change or restructure a liability insurance cover because you don't even understand the potential tomorrow of someone going to sue you. So the liability insurance is a vital, important element. Linked to that, if you're in a professional field, such as an engineer, a consultant, a lawyer, as Peter is, an accountant, you have what's called professional indemnity insurance. And the trick to professional indemnity insurance is liability, public or products liability, responds to the incident when it happened today. So somebody hurt me today, I sue them, the incident goes against the policy of today. Professional indemnity works on when the claim is first made against the individual. So if I'm an accountant and I gave some advice today, in 3 weeks' time, I elected to lapse my insurance because I thought it would be a good idea to cut costs. In 3 weeks' time, someone gives that advice, they've read it, it doesn't quite work, doesn't make sense, and I've made an error. They seek to recover by way of compensation against me. And if I cut off that professional indemnity insurance, I've effectively got no cover. The trick to having no insurance means I'm effectively exposing my whole life's work simply to try and save a very simplistic expense. So insurance, you've got to look at it in the longer term. It's a longer term expense, it's a longer term benefit, and insurance is there. Whilst it's still only generally in a business sense 1% of your cost, it does protect your whole life. So it's very, very important. So if we get down to some specifics that I wanted to talk to you about property insurance and some things that are going on. There's a lot of properties right now that are vacant. The tenant isn't there because the tenant has had to close the doors. There's a whole mechanism about does your insurance respond to a vacant property, because there's a scenario that you've got a duty to tell the insurer that the risk itself has changed. So anytime a risk has changed, so something happens, so what you've described to the insurer or to your broker, the risk is this, they charge you a premium based on that scenario. If that scenario changes, you have a duty to disclose that to the insurer. And the insurer can either cancel your insurance, charge you more money, or change the terms. So what you've got to be mindful of is anytime there is a vacant property, if it was vacant beforehand, okay, you should have disclosed that. So we're not talking about ones that were already vacant. We're talking about ones that are vacant right now due to COVID-19. So the scenario is a lot of the major insurers this week, and as of 5 o'clock tonight, we got another announcement. A lot of the major insurers are now being willing, without penalty, without cost, to continue to protect the current policyholders in relation to vacant properties that is due to COVID-19. So that's a great result. The trick to that, though, is you're still going to be mindful of your assets. Someone's still got to go in and tidy up the waste. Someone's still got to go in and make sure the doors are locked, the alarm's on, and there's not a water leak. As an example, in our office, we've got 80 staff. We're all working from home, but we had a water leak this week in our office. But luckily, someone needed to go in, someone saw it, someone stopped it before it was there. So there's still that element of risk. You still got to keep an eye on the property. So we recommend that where at all possible, still have processes in place to try and control the risk the best you can, that someone's there checking all the time. Not all the time is the wrong word, but periodically is probably a better word, just to make sure these things aren't happening. So if there's an electrical fault, there's a water leak, there's a whole lot of waste lying around, you're more susceptible to a much bigger claim. So keep an eye on the properties. So that covers off vacant properties, and also wanted to talk about tenants. tenants in relation to insurance, a lot of office owners, building owners, even landlords in a residential sense would have potentially bought loss of rent insurance. Because there's no occurrence, there's no trigger, there's no damage, the loss of rent insurance doesn't apply. So when somebody starts to not pay rent, the government 2 weeks ago, we thought that they were going to come up with some announcements of how they were going to protect the tenant as well as the landlord. We still don't have a lot of clarity on what's going on the landlord side, and hopefully that, as everything rolls out, we'll get a bit more clarity. There's more probably an angle for the banks for that, but we still need to protect landlords' cash flow because a lot of them don't necessarily have the means or the wealth to just ride this through. So we would urge tenants and landlords to simply just get together. Ideally, we'd have a much better response, but from an insurance perspective, there is no response, unfortunately, for a loss of rental type cover. What some of the announcements that have come out has basically blocked any evictions. So what that basically means is if you're a landlord, you're blocked from taking the legal remedies to go and kick someone out in a normal sense. Not that you would do that now, but in another environment, 6 months ago, 12 months ago, there was these processes in every single state where you could go to the various tribunals, get an award, and out you go. A lot of those are no longer available to us because the whole mechanism has effectively been shut down. So what that basically means that from a landlord's perspective is the loss of rental is effectively locked out until there is another form of an occurrence. So that's another area where insurance unfortunately isn't able to respond. So then what I wanted to talk about is my last point, some of the risks that we're all facing whilst at home, some of the insurance risks. The risk from a computer perspective, when you're in an office environment, it's controlled by the office environment, or whatever that may mean, that's normally got a higher level of security than a home environment. So what we're seeing and hearing about is a number of, I suppose, let's call them cyber threats coming into the market, particularly for more vulnerable people when they're at home. So you've got to be mindful of how the cyber risk is sitting, and then you've also got to check from an insurance perspective, because if there is a cyber threat and a cyber attack, under a cyber insurance policy, that can be covered. So that's where insurance all of a sudden can come back in. What you've got to make sure is with your cyber insurance for your business, if you're working from home, make sure that there's some allowances in relation to a work from home and work from a home device as well. There's a couple of mechanisms in there that you just need to check. Call your broker and ask them. Well worth it, great bit of advice. The second thing I wanted to talk about in relation to work from home is your assets. Under a normal home insurance cover, a lot of the time, your business assets are not covered when they're at home because your home insurance covers you, business insurance covers the business. So what you've got to be mindful of in the current environment is we're now blending more and more those two scenarios. So does your house insurance cover you for any business related assets that you're now storing in your home? And there's a whole lot of announcements that we've been waiting on for insurers to come out of how we can try and close that gap, because you've got a business insurance policy that was never really designed to have all of the workforce at home and have various computers, various other electronic means, and in some instances, a lot of stock. So we've got to be mindful of those elements and quite quickly blend an insurance cover that wasn't intended to do that. Check your home insurance first, but a lot of the time that isn't the right answer. So you've got to talk to your broker or to your advisor about what your home insurance might do, what your business insurance can do, and get a couple of tweaks in relation to the covers. As a blanket, we would have preferred the insurance industry to come out and probably clarify that aspect a bit better. We understand that's going to happen next week, so we'll keep a watching brief on that and let everybody know. But right now, the risk is there, so be mindful of what the risks are. So there's some of the key things I wanted to talk about. I can go on and on about other risk in an insurance world of what we see and how we see it and how we deal with claims and accidental damage versus defined events and having meth labs in your landlord's house. But they're probably conversations for another day that, unless there's a particular question, that's going to be enough for me, and I'll hand back to you, Uwe.
When you find the right button, it works a lot better. Thank you. Mark, fantastic. 2 take-home messages that I certainly got from this. One, and I must admit I'm surprised that due to no event being there, landlord insurance will not cover. It makes sense when I think about it from an insurer point of view, definitely. And that just means that we need to be even more on the front foot, both as tenants and as landlords. My strong suggestion is whatever you do, communicate, talk, keep each other informed. If you are a tenant, speak to your rental manager or speak to the landlord if you have direct contact. It's all about being in the know. That's also why we do these briefing sessions. Forewarned is forearmed. So don't wait till you can't pay, or don't wait till you find that your statement shows no rental income, depending which side of the fence you're sitting on. Get in early, communicate. There is a moratorium out that no tenant can be evicted. Now, I don't know what the other two, I haven't seen any details on that yet. As far as I'm concerned, it's a statement of intent by our government, but it's not even law yet. So, Peter, maybe you can clarify that a little bit.
It's certainly not in law in Queensland yet, Uwe. It hasn't been. There's not the legislation. We haven't seen any draft legislation yet. There may be being drafted, but it certainly hasn't. It certainly hasn't been legislated yet.
Yeah.
While I'm on that point, just very quickly, there was an announcement today about commercial tenants. So,
all right.
They've come up with a principles for dealing, or how commercial landlords and commercial tenants are to deal with each other. And that's probably not our primary focus today, but you can certainly go on to the Prime Minister's media statements, Google Prime Minister's media statements, and you'll find that they're talking about proportionality in negotiations in terms of rent reductions based on how much income's been lost by the tenant. That's all got the issue that Mark raised, which is that landlords with mortgages, can't just say, we'll let you have a period completely rent-free, from my point of view. Many tenants are trading, perhaps not at the level they were previously. And even food and beverage tenants, many of them in this area, are still trading for takeaway. So, there has to be a real discussion, communication, landlord-tenant communication, and the facts have to be put on the table. People can't just expect to negotiate. Tenants can't expect to negotiate a rent reduction without explaining and giving facts about what their financial situation is and all that sort of stuff. So, it's important to take your own professional advice, whether you're a landlord or a tenant, but it's also important, very important, to communicate openly with each other about what the circumstances are.
Yeah, thanks, Peter. And to be honest, that is one big change that I see, and that's one silver lining that I see, is that to me this is a reset button. And one of the reset buttons that is being hit is that people understand these are unusual circumstances, and people are starting to talk more. And I would like to think that common sense prevails and that everybody does what is reasonable. It would not be reasonable for a landlord to try and kick tenants out that have lost their jobs. And at the same time, it would not be reasonable, in my view, for a tenant to say, well, bugger the landlord, I'm still okay, I'm still employed, I still have income, nothing much has changed, but here's an avenue for me to not pay rent. So, as long as we're all reasonable, that's all fine. But I want to get back to the second point that you said, Mark, and that is something that, and this is, guys, this is where a good advisor comes in. I, with all the experience that I've got, did not think about checking my home contents insurance, because I now have also, through family members, our daughter has got an additional computer here, and work equipment here, I would have not thought about checking my insurance cover. So, Mark, you'll get a call from me tomorrow. Because I practice what I preach. Mark is our insurer. Peter does our legal stuff, and both very good at what they're doing. So yeah, that's fantastic. By the way, we've got the live stream going, so that's good. Let me just check. Have we got any questions on the live stream? Yeah, there's one question for Peter. Do you do wills and estates?
Yes.
Right.
It's one of my focus areas. So yes.
Okay. Again, I can't hold on to myself. Of course, we've done our will and estates planning through Peter. Horses for courses. Again, you can't soar like an eagle when you're surrounded by turkeys. It is no good going to the newspaper shop and getting yourself one of these will kits. If you've got an asset base of $2.50, by all means. But I know that these are not the people that are on this call. So spend the money, do it properly. And there are complexities that, again, I didn't think about in the discussions with Peter that came up. And as we've just seen on insurances as well, surround yourself with the right advisors. Okay, I get off my house. I'm sorry, I get carried away. It is well meant and well intentioned. Okay,
just while you're looking at the next question, if I can probably make a generic statement on that then from an insurance perspective.
Sure.
What we find in the 30 years I've been with insurance, the most commonly asked question is, how much do I insure my asset for? And the answer to that generally is, we don't know, because we're not a professional valuer. So the whole idea is, don't go down the corner and ask your local builder how much it would cost to rebuild that asset, because that's never the right answer. What you've got to do is have a more structured conversation. The structured conversation is, how much would it cost you to rebuild the asset, and what's your allowances in a catastrophic environment when there's a whole lot of resources and materials potentially not available. So you end up with a bit of a loading straight away. Then on top of that, you've got to add on things like removal of debris, architects and redesign fees, council fees, and also other time allowances through that. So what we try and do is, without being a valuer, because we always recommend you get a valuation because they're the experts, but where for whatever reason you don't want to and you just want to guide, it's not our job, but we do prefer to at least guide you through the conversation of getting a guide to help you understand what the insurance is really worth, because why buy insurance if it's not going to give you what you need? So there's a mechanism that we go through, and a lot of others in our industry do, but when you have that conversation with an insurer or a broker, first of all, how can I help myself determine what's the right level of insurance for that asset? And then we go through that mechanism, and we have other tools that are available to us to at least point you in the right direction to get you closer. So as an example, we've had, I think it's about 700 queries in the past 12 months to talk through people about how to review their limit of insurance. So the primary focus of that is, insurance is nothing about price. It's all about the protection. And when you insert the word protection, you then, once you get the protection right, you can then talk about price. So it's that mechanism of getting the protection right first that we think is vitally important.
And Mark, underinsuring is just a real problem.
It's a massive problem in our industry. There's many tools available across the whole industry that, like a lot of things, that should have been eradicated years ago. But unfortunately, the decision is left with the person who's least educated to make that decision, being the property owner. So there's got to be a better way to do it by simply just asking a better question, and just ask the right question of the right people at the right time. And you'll normally, in your eyes, you might be loading your insurance, but the reality of it is, we have a saying in our office, it never is always that, but it's 50 grand for 50 bucks. If you're willing to spend another $50 on your insurance, would you get another $50,000 benefit? So when you get that benefit, you don't really care about the 50 bucks because no one really worries about that. So always put protection first.
Yeah.
That's great. Thank you, gentlemen. I'm always muting myself in between because I'm tap dancing away here on the keyboard and doing other things, trying to keep everything rolling. Whilst we're on that, Mark, what's the best way to contact you if people have further questions?
Uwe can put my details out there. As a conversation, I'm more than happy to talk to anybody because I find the conversation to help streamline the thought is the most important part. So anybody's welcome to call me. I'll give you my mobile because there's no point calling my office. It's 0409 705 931. Uwe knows me quite well. He can publish that. The email is marko at A for Apple, B for Barry, countrywide.com.au. I just saw a question come up about what we specialise in. We've got 80 staff, and what we're trying to do is break it up first and foremost to a not necessarily a product specialty, but a field specialty. So if you're a specialist in construction or a specialist in doing engineering or accountants or lawyers or even hairdressers, we've got lots of people that specialise in different things. So for my sins, I'm a specialist in construction and property, but I also sit across our corporate team that do a lot of different things. So there's certain sectors in our business that we've got a lot of clients that are in a lot of trouble at the minute. And there's other sectors that things are going quite well because they're booming because they're in transport and logistics. So depending on what the question is and what people need, what we try to do is direct them internally to the right person with the right answer so that we can end up getting you the best advice from that industry specialisation.
Yeah, that's great. What I've just done is I've put your details, Mark, in the chat box, and we will publish that also when we do the recording. And I am just, Peter, do you prefer your landline or do you prefer your mobile?
Mobile.
Mobile, okay. So that goes into the chat box right now.
Thank you.
So that people have got the details. That's all good. That's all good.
There was an early question in the Zoom chat from Ruan about insurance for a strata property.
Let's have a look. Paying insurance. Okay, that's for Mark. If you are paying insurance through a strata plan, what extra insurance you need to buy for an investment property?
It gets complex depending on what insurance cover is in place, and even the different jurisdictions across different states are different. So forgetting the complexity for a second, what you would normally look at is the strata insures the four walls. That insures the buildings that is owned commonly and insures any other assets that is part of the common element to it. So then anything that becomes your asset, and generally it's just more an historical issue, but carpets and curtains are always classified from an insurance perspective as being replaceable by the contents insurer and not by the strata insurer. So carpets and curtains and air conditioners are three areas that we're always conscious of. So if something were to happen and there's a water leak within your apartment only, and that damages your assets, then you're not covered by the strata insurance. So what we normally try and do, and it's a relatively low cost, is you would buy a liability cover for slip, strips and fall within your complex, within your unit. And then you would generally have a relatively low contents cover, depending what's in there. So if you're in North Queensland where they've fitted out apartments and people go in as a holiday let type environment, the contents is obviously much higher. But if it's a permanent type facility, you might have a sum insured that's a lot lower, but you end up having a degree of contents cover for carpets, curtains, and a lot of the time for air conditioners, because each particular unit or apartment might have their own air conditioning system. So as an example, we've had a claim, I think it was about 3 weeks ago, there was a big lightning strike. The lightning strike hit the facility. The facility itself had a claim, but all of the individual homeowners had a fridge, and they had an air conditioner. So they ended up having to make a claim on their individual policies because the strata insurance said, we'll pay for the electrical surge that hit the buildings, but we're not paying for your fridge, your microwave, etc., and your air conditioner. So all of those lot owners, and there was 26 of them, ended up having to make about a $3,000 or $4,000 claim on their policy. So as a mechanism, liability, small contents cover to cover the types of elements, that would be where you would start with assessing the risk.
Mark, do the contents covers also cover the internal fit out? So if you've got built-in kitchen fit out and your built-in wardrobes and those things?
It's a good point, and it depends on the strata, so that's the hard part. But once you have a fitted asset, such as a kitchen, the intent is the kitchen forms part of the functionality of the place. So normally a kitchen that is built in would be classified under the definition of buildings.
Okay.
So the four walls as such, the built-in kitchen. When you get to robes, as your example, sometimes robes aren't built in, sometimes kitchens aren't built in, depending what you put in there. So the best answer is when the building was constructed, what is already there, and when you first purchased that unit, what did you put there? So anything that you put there or you're in control of, with the exception of carpets and curtains, because that you've always got to have those differently. So that's the way you would look at it. Good question.
Sorry, and important for both the landlord and the tenant to have public risk or public liability or public risk insurance.
Yeah. Everyone must have liability because whilst it might be a once in a lifetime scenario, that's what you buy it for, to protect yourself, because you definitely don't want to be involved in a situation where someone is injured and then you've got to try and deal with the emotional response as well as the financial response. Have your insurers already set up to deal with that mechanism for you, to take you out of the picture altogether and let them deal with it.
Yeah.
That's a great point. I see insurance as reverse Tets Lotto. You don't want your number to come up.
Yeah.
And yes, 99 out of 100, nothing happens. But if the 1% happens, it can wipe you out. That's just a game that Ulla and I, my wife and I, are not willing and prepared to play. So, I call it the sleep easy factor. And that's just the cost of doing business and the cost of being clever about what we do. There was also another question, can Mark deal with advice on personal income and protection? Yes, you can. I know that. And
I can and I can't, depending what it means, because there's different licensing, just more as a clarification.
Sure.
I don't want to dog people in. So there's the life insurance sector, and then there's the general insurance sector. So income protection, life insurance, all of those things has a very different licensing regime. We've got people in our office that can do it. So what we would do, and I know Uwe often refers people to other people to look at that. So we have people in our office to do it, but I'm not licensed to do it. I generally handle that one.
Okay, all good. All right, the time is running away from us because it's fun to have a chat, and that's why we keep this open and keep this very much interactive. Let me just double check Facebook. No specific questions there. Yeah, look, I've promised I'll lift the veil on where Ulla and I are at and what we are doing. I summarize what Ulla and I are doing into 3 categories. 1, we look at our expenses and we simply tighten our belt. I don't know about you, but we had things where we said, yeah, nice to have, but for the moment, we're going to cancel that. 2, we look at our income. Are there ways that I can create additional income? And I'll give myself a shameless plug. As from last night, the Property Friends Institute of Training is alive and kicking. pfit.online. No .com, no AU, pfit.online. Now, why did we do that? I had it planned for 1st of July. Well, it's amazing when you got your back against the wall how fast you can move. So, yeah, there are surely ways that each and every one of us can think about, how can I create an additional income? A relative of mine in England, she looked at stacking shelves at night. In the end, she went as a additional part-timer, working from home because they've got 2 small kids. And she does a telephone answering service for government health insurance. So I guess what I'm saying is, sit back, relax, take the emotion out of it as much as you can, and go and look at how can I decrease my expenses, increase my income, right? And even if you come up with, no, there's nothing that I want to do in either of those 2 areas, you've checked it. That gives you certainty, and that gives you more of a feeling of being in control and being reassured. That can only be a good thing. Now, the last point that Ulla and I are doing, and I suggest that to everybody, is look at the government subsidies and benefits that are being handed out, both federally as well as in state. Now, there are some amazing schemes that are accessible. We heard yesterday from Melissa Mann. Peter, I saw you smiling from ear to ear. Interest-free loans provided by the state government. Now, unfortunately, or fortunately for the Queenslanders, only in Queensland, but there are other state schemes, benefits available in Victoria. So allow me to just, I'm going to give you the guts. I'm going to give you what we are doing. So allow me to just go through. So let's go federal first. There is a PAYG cash flow stimulus. It is going through the ATO. Now, I will not be able to go into all the details because I don't want to make this a 3-hour session. Essentially, you need to be an employer and need to have been established before the 12th of the 3rd, 2020. This will go through your BAS and is a minimum of 20,000, a maximum of 100,000. So what that means is that I can get a benefit through my BAS. I don't know about you, but 20 grand is a heck of a lot of money in my books, especially at the moment. For apprentices, there is a 50% wage subsidy, and there is, of course, the asset write-off. Now, I'm not sure that that makes much sense in my books. That's just me. But in uncertain times, very few people go and buy assets of 150,000. But if you are in that position, it's a good immediate write-off. Then we have the JobKeeper payment. That I see as the one subsidy that will have a very, very positive effect on a great number of people. So for a business that had employees on the 30th of the 3rd, 2020, is my interpretation, talk to your accountant, and your turnover has reduced by more than 30% over a comparable period. What is a comparable period? Talk to your accountant. So, as long as your turnover was reduced by 30%, any employer currently or was previously employed as of 1st of March, the employee can be full-time, part-time, or long-term casual, and this includes self-employed, trusts, and partnerships with no employees. So it's a very wide-ranging safety net. There is $1,500 per employee per fortnight, is my understanding. Now, my understanding is also at this point in time, this is being paid to the employer to be put through in full to the employee. There is no PAYG, there is no payroll tax on any of that, so it's a very fair way. Now, I don't know from when on this will be paid. The best way to go there is to register at ato.gov.au/journal/gen/jobkeeper payment. I'll put that into the notes in a minute. And my understanding is also that the employers are required to notify at that side of each employee that we wish to register. So let's go again to Ulla and myself. Let's talk practical example. Property Friends has 2 employees, Ulla and myself. We are employed and we have been employed for many, many years. So that means I register Ulla and myself at the government website, and henceforth we get $3,000 a fortnight for our employees, i.e. for ourselves, because we as the employer put it through. Now, that is a good amount of money in my books anyway. Okay, then there is the PAYG installment refunds, which goes through the ATO. You can vary your PAYG March installments to 0 and claim refunds for December and September quarters now. It will be done in the March BAS, and that applies for individuals and businesses. Again, what I'm saying here is just a general overview. Please check with your accountants. It's my understanding, but check with your accountants. Then we have got some state, and I'm in Victoria, so hence I know this one best. There is the Business Support Fund. If a business has staff, so Property Friends has staff, if you are subject to closure or highly impacted. Now, what's highly impacted? I haven't seen a definition yet, but if you lose substantial amount of a business, or if you need to lay off people, that's definitely a high impact in my books. Talk to your accountant. There is a further caveat that your turnover must be larger than 75,000, and the payroll bill must be less than 650,000. You must also have an ABN at 16,320. So here it comes, brothers and sisters. Provided that you fulfill those requirements, you certify in writing that you meet the criteria, and this will be subject to audit for 4 years. So please don't play with it. You provide a copy of your most recent BAS to the site that I will put into the chat box, business.secure.force.com/public form (ID) blah 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 blah. I put it in the notes. And presto, you get $10,000 cash. Now, that is a nice and welcome gift. So that's a grant that is available in the state of Victoria. Kicking on once more, in the state of Victoria, you can apply for payroll tax refunds. Again, there's some caveats around it and all of these things. Now, there's one other thing that I want to raise, and that's got to do with cash flow. Especially in challenging times, cash flow is king. Now, one, Ulla and I will apply for extensions to our bankers for our mortgages. At the moment, we are in a lucky position. Our rental properties, amazingly, all of them, we have not been notified of any tenant having hardship. So, nevertheless, I am going to notify our mortgage providers that if we get into hardship, I want 3 months extension. We're still talking about it, and that's a very personal discussion. Depending how things go, I will even defer my mortgages for 3 months. Yes, the interest capitalizes, but it gives me another buffer. Now, it's a personal thing whether you need another buffer. I tend to play on the safe side. So just consider it. Please consider, as they say in the advertisement. Then there is an unsecured loan for up to $250,000, a business loan available for a 3-year term. And you can even defer the payment for 6 months. I believe these loans are offered by CBA, Westpac, and NAB. Again, this is one of the subjects which is hot off the press and is needing of further fleshing out and further details. But again, if I can get access, say, to $50,000, I may not need them, but having access to them, to me, is worth paying 4.5%, 5% for, say, 3 to 6 months. The security that I have and the flexibility that I have is certainly worth it. So that's what we're going to do. Okay, we've hit over the hour already again. This has been fun. Apologies if I get carried away with this stuff. It's all meant in good intent. I'd like to thank the panel. Mark, any final words from you?
Just turn myself back on then. I just really appreciate the opportunity to talk to people. I hope the more conversations that people have with their advisors, first and foremost, their work colleagues, etc. You mentioned before communication, and that's the key. So the more we can communicate, then a lot of these hassles that we've got and these problems that are insurmountable, they can at least somewhat go away for a short amount of time. So the more we can communicate, the better. So thank you.
That's fantastic. Thank you. Peter, any final words from you?
I'd just like to thank both you and Mark for the great information tonight, and your other panelists on the other nights, Uva. I think the information's been very good. It's been great for me. There's been a lot of information that has helped me, but also it's been new information to me. So that it's been great for me as a business person to be able to get across all of the information that's coming from the other professionals. And I think, you and I have said a couple of times, Uva, take advice from your range of professionals before you make any big decisions or tough decisions. And I think that's an essential thing. I think you get the right people around you, and then make sure you take their advice before you make any big decisions about what you're doing.
Yeah, look, I cannot stress that enough. And it's amazing to me when I talk to my advisors, often enough my thoughts get clarified, we bounce things around, and without fail, we come up with a better solution. I come up smarter. I like being smart, so that's okay. These two guys make me look smart. That's even better. All right. Thanks very much. We will put this recording on Facebook, on LinkedIn, and I will put all the links and details of the two gentlemen that were on the panel tonight in as well. Have a good evening. Have a glass of whatever your fancy is, and enjoy. Thank you very much, gentlemen.
Thank you.